Welcome back to the market, and yes indeed the market is all excited with respect to the big GST reset that has been announced. GIFT Nifty for now is indicating a gap up of over 100 points right now. But with this, let me also welcome Sunil Subramaniam, market expert on the show right now. Mr. Subramaniam, a very good morning, and seems like a great morning for the markets as well. Post that 15th August, there was indeed a lot of excitement, but along with that, the consumption boost is what we are getting to pan out, or the announcements were clearly on the consumption boost side. Why don't you firstly help us understand that which, as per you, will be the key beneficiaries of the same in terms of the sectors?
I think this is probably as wide-ranging a regulation that we have seen, right? And it's not just consumption. I would say the agri segment, the amount of giveaways they have given to the farmers through tractors, tires, and their equipment, the urea, even the fertilizers. So I think agri is going to be a big beneficiary, and that's important. The second is, I think, the healthcare segment, right? They brought down the cost of a lot of medicines. At the same time, insurance premiums on healthcare have been slashed out, in terms of the GST. So I think that's a huge boost. While pharma companies may feel that there's no input tax credit, I think the volume increase because of this should make up for it. That's the second aspect. I'm going away from just pure consumption. The third, of course, is the fact that even from an exports perspective, you see the up the value chain, they have cut for textiles and all of that. So it's going to be, again, something that's going to help us counter the tariff. So I think, as I said, very well crafted. But most important overlying here, I would like to make 2 points. First is that when Mr. Modi announced it, there was already the expectation this would happen. But as you know, the group of ministers and then the council, there's the opposition which is there. So whether they would be able to get their buy-in, the states would be objecting to their loss of income. But I think it has been very smooth, and just in the space of a day, the country has come together. So in a way, I may take a lighter note that we should thank Mr. Trump that because of his tariff, the country has come together to counteract this. And finally, I would say this is the natural consequence of fiscal and monetary policy benefits. It started with the tax cuts in the budget. It got supported by RBI with their rate cuts and liquidity infusion. And now with this fiscal policy, now the baton has passed from the government and the RBI to the corporate sector. Now it's up to them to pass on the full benefits of this to the customer, because that temptation will be there to look at the margins and say, should I pass on? But I think this is not the time for short-term thinking. I would encourage that the corporate should actually maybe take a little bit hit on the margins, but because the mood of the consumer is poised for change, because starting with the Navratri and Diwali and Christmas, right, they will be now in a spending mode. As you know, the tax cuts did not lead to a great consumption boost because people tended to save it more rather than spend. So mentally, I think this is the big thing because of the publicity this is going to get and a tremendous goodwill that it will be generating. I think the sentiment of consumers to shift, manufacturers should take advantage of this and come through and make sure the pricing is competitive, because banks, by reducing interest rates on their EMI, will support this. The government has supported. It's up to now the private and public sector manufacturers in this space to carry it through. And one final point, if I may add, see, about 60% of the rally in consumption has happened post Mr. Modi's announcement on Independence Day. There's about another 30-40% which will not follow through. But the big winner in this would be the fact that with the consumption boost, capacity utilization in the country will now go up. And as it crosses that magical 80% figure, we should see private capex. We already saw the L&T CEO say that there is a green shoots, but that's mostly in the power and infrastructure. But you need a wider capacity expansion from the private sector, and I see this as kickstarting that. So from a slightly medium-term perspective, I think this has been a huge boost to the overall economic growth of the country, which would naturally reflect in the stock market earnings over a period of time.
Right, Mr. Subramaniam, thank you so much for that. A very holistic view on how you expect this entire GST rate rationalization to play out for the sectors. And Soumil, just taking ahead from what Mr. Subramaniam was talking about in terms of the agri commodities. First up, let's talk about the agri space overall and fertilizers. You also have a slash coming in on fertilizers to 5% now, and all the chemicals also that are concerned with this entire fertilizer industry. Any stocks that you are liking, Soumil, from this pack right now? Are fertilizers looking more attractive on the back of this news flow?
Not yet.
Okay.
I'll just wait for with just wait for some confirmations. Let's say we are talking about Deepak Fertilizer, we are talking about SRF. SRF looks good. It has started high tops, high bottom, so that one stock looks good. So I would probably talk about SRF more. Has taken support at 200 daily exponential moving average, closing about 20 daily moving average. So SRF definitely looks good. Medium term trend is up. Uh, you can actually go long on this stock around keep a stop loss around 2880, and the target should be around 3100. So I think SRF looks good. Deepak Fertilizer, I will wait. I have been positive on Deepak Fertilizer for a little while now, but in the medium term outlook, not in the very short term, because in the very short term it is sliding down and it is closing below 20 daily moving average. So I'll wait for a confirmation above 40 daily, which is 1500. If it closes above 1500 levels, I think that will be a good time to buy.
All right, so those are some of the fertilizer and chemical plays to watch out for. But with this, let me also welcome Rajesh Parmer on the show right now. Hi, Rajesh. Good morning, and seems like it's turning out to be good morning for the markets as well. But Rajesh, auto sector, that has got a whole host of announcements from passenger vehicle to commercial vehicle and also the tractor space as well. If you can firstly help us with your take and your top bets within the auto pack right now, because they have already seen a very good run up post that 15th August date. But for now, anything that is still looking attractive to you?
Good morning, Shasti. Good morning, everyone. So, looking at the announcement, I think there would be a cheer rally would be there in the market, and I think on the index front, we are going to have a breakout about 24,700, and then possibly rally can extend further. Moving to the auto sector, the sector is in uptrend. If we analyze the most of the auto stocks, be it two-wheeler, be it four-wheeler space, most of the stocks are showing good traction since last couple of week. And looking at the near-term, short-term structure, we do believe that we could see further more continuity of uptrend, though we have already seen a good amount of rally in most of the stocks. So I think from two-wheeler space, we believe that Hero Motor, Bajaj Auto, TVS Motor, all these three stocks can continue further more upside as the near-term, short-term structure are bullish for this counter. So one can look to buy Hero Motor, Bajaj Auto, and TVS Motor from two-wheeler space. And looking at the four-wheeler space, I think Maruti is looking very promising, and the way Maruti is holding above all its important moving averages. I think there is a possibility of 15,300 to 15,500 we could see in Maruti in the continuation of this up move. So one can look to buy this stock also. Again, Ashok Leland is also looking very promising, the way stock is consolidating at a higher band of rally. So I think here also one can focus to buy. Any breakout above 134 can take this stock further higher to 145 to 150. So I think most of the auto stocks as well as auto ancillary all are looking good, and I think further more continuity of uptrend post this announcement can continue in this sector.
Right, okay, so that's the take coming in on autos. But Mr. Subramaniam, another sector that stands to benefit largely is the insurance sector. Now that the GST on insurance premiums on both life and health have been waived off, what are you making of this news flow in terms of how this could boost the penetration in India, and what could the timeline here be?
I think that it will be a huge boost for the penetration, because psychologically, this will be a tilting factor, because the fact that something that a common man needs was being taxed was not generally received well, and probably a little bit of hesitancy there. But this announcement will bring it to the fore into people's minds. And I think the baton also lies on the private insurers. Now, why I'm saying this is that, as you know, input tax credit, they may not get. So because of which there will be a temptation to pass on some of the GST thing to the customer. right? The lack of input tax credit. So if the industry plays it carefully and looks at the larger picture in terms of the volumes that it will generate for them, right? And do not worry too much about short-term profitability, right? I think it will be great for the expansion. So you got to wait and give it time for this to get played out. In the short term, there might be a reaction in insurance stocks because of the fact that, there'll be a hit to their P&L because of this. But I think that's a balanced approach is needed here. And I think any price corrections in the insurance space should be a good accumulating point, because ultimately this is a huge positive for the overall penetration, and which, as you know, we're still lagging way behind the developed market in terms of insurance penetration.
All right, that's the take coming in on the insurance pack. Well, of course, a whole host of sectors will be in focus on the back of the GST announcement. But interestingly, there are so many block deals that are seen to be happening right now. We have a block deal that happened on Eternal, Shriram Finance as well. But Soumil, firstly, let's have your take on Eternal as well as Swiggy, because for Eternal, just yesterday, we had that announcement coming in on hiking their platform fees, and Swiggy, yet again, doing the same way. Help us understand how does the setup look on charts?
Eternal has always been on my list. Great setup, high top, high bottoms on all time frames. Taking support every time it dips down, it takes support at 20 daily moving average or 40 daily moving average and starts resuming the uptrend. So great setup in the medium term outlook. In the short term as well, I think looks good. You keep a stop loss around 307. And I think the next level to watch out would be around 360, 370 levels. Eternal definitely good. Swiggy, I would say that Eternal would be a better bet than Swiggy, but in the very short term, Swiggy is also looking great. It has formed a small bullish flag pattern and has broken on the upside, and I think it should look good from here. Should rally, should give a very good rally. Keep a strict stop loss around 405, and you can keep a target of around 470, 475.
Okay, so that's the take coming in on some of these quick commerce, quick food delivery players. Soumil, also in terms of the beneficiaries that we've been talking for GST, anything else apart from insurance, autos, or even in the overall market setup, any stock that is now looking attractive to you, given that it looks like we may begin some run up in the equity market right now?
Okay, so two sectors which I would want to talk about. One is defense. Let's start talking about defense first. Defense has been correcting for a little while now. HAL, Mazgaon Dock, BEL, these stocks have been correcting, and they've corrected almost around 25-30% from their highs. They are sitting at 200 daily moving average right now, and it has not given a confirmation yet, but I think within couple of trading sessions we can get a very good confirmation. My preferred pick would be Mazgaon Dock. Mazgaon Dock has taken support at 200 daily moving average, closed about 20 daily moving average. Stop loss should be around 2580. And I think the next level to watch out on the upside would be 3,100. So defense is one sector which I would like to, wait for. I'm just waiting for a good breakout. The second sector which looks good is large cap IT stocks. Infosys, TCS, all of these stocks are looking good on the charts. But for a bounce, I'm not talking about medium term outlook, but TCS definitely looks good. Let me give you levels. This can start a rally from here from the bottoms. It has been correcting for a little while. So TCS stop loss should be around 3040. That will be one crucial level to watch out for. One more stop loss would be 2990. And I'll be expecting a very good sharp bounce back from here till 3300 and 3375.
Well, look at how the pre-open rates are panning out. Look at a Unilever. I think it's a 7.5% uptick that you're seeing on FMCG names. We'll mark the index in just a bit, a 1% move. Look at that. Unilever, I don't recall when Unilever moved 7.5% in a single shot. Of course, these are just the pre-open rates right now. But also the likes of a Nestle, Colgate, Britannia, which are also key beneficiaries of several consumer consumer goods, which are now going to get taxed at 18% as opposed to, or rather 5% as opposed to 18% earlier. So big fillip and sentimental positive for most of these FMCG plays. GCPL, Marico, Dabur, Patanjali, that entire pool stands to benefit, and all these stocks are just coming up for you on your screens. QSR as well. While the GST rate on output remains unchanged, there's definitely this lower tax on key inputs like, cheese, some of the non-veg items as well, where rates are going to come down from 12% to now 5%, while pizza bread goes down from 5% to nil. So look at a Jubilant Foodworks, look at a Devyani, Sapphire Foods. All these stocks also are going to be big beneficiaries, and I guess you can see that sentiment play out on most of these names. Apparel, footwear, what are these stocks up to? ABFRL, Trent, Bata, Metro, Campus Footwear, this entire spectrum would see a fillip, and that's definitely playing out right now. Internet platforms, I want to check in on those, considering, they're clearly the market darlings, but this levy of 18% GST on local delivery services would be a slight negative, come to think of it, for the likes of an Eternal and Swiggy. Of course, they would not hold back in passing it on to consumers, I'm sure. But given that they have at least Eternal has just taken a hike as of yesterday or day before, I think, on their delivery platform. So I don't know how much of it can they really pass on a consistent basis. Of course, we still have time up until September 22nd when these new GST rates are applicable. But Eternal is just lying quiet right now at that 327 odd mark. I also want to check in on the negative impact of the GST announcement. The fact that tobacco products are currently taxed at 28% GST plus cess, which will now continue till the loans, the tax shortfall to states are actually repaid. Post this, remember, the compensation cess will be subsumed under GST at 40%. So ITC, VST tillers, this entire pack does get impacted, and Godfrey Phillips as well, although Godfrey Phillips is still holding higher by about 3%, and VST just mildly higher. ITC is the other stock which should just come up for you on your screens. But let's analyze the market impact. We've got Gurmeet Chadha joining in on the show right now. Gurmeet, a reform moment clearly for India right now, this pre-Diwali dhamaka that the government has given us. Do you think the market will also see that dhamaka? Because the market has been lying quiet for the longest time now. We've had such a range-bound index and stocks as well at our hands.
Absolutely, Aisha. And I think very good morning to everyone. And I think, it was much needed. I think it also, what I also liked was the urgency. The 2-day meeting technically decided everything in the 1 day. So sends a strong message on urgency. Secondly, a lot of similar items are now would not be taxed differently. Something as simple as bread, something as simple as, let's say, pizza, paneer, a lot of things. There was anomaly. Also, they tried to, address the inverted duty structure. So, for example, all the auto components, for example, now they have this, HS code. So that also will be taxed, at the same level. So what we are also going to see, along with obviously consumption boost, demand boost, and growth pickup, is lesser disputes, more compliance, and which is much needed for any robust tax system to do well. And I think it also has a positive impact on the CPI basket, almost 20% of the CPI basket, because your essentials, groceries, everything go down, medicines go down. That has an impact. So you have lower inflation, you have higher demand, higher growth, you have a festive season coming. In my view, this will negate some of the tariff impact the economy is facing. And also, I think the sentiment, it's just that across, the sentiment has been very, very negative. It's not the actual impact, but just the sentiment. So I think it will revive a lot of that as well.
Right, and Gurmeet, hi morning, this is Snehi also joining in. What your sense on the entire auto pack? Because while the street is cheering this 5% figure for EVs, you also have a slightly larger passenger vehicles that have now edged towards that 40% slab. Overall, net, how could this play out for the entire auto segment?
No, I think it is pretty positive. Even if you look at the 1500cc and above, if you add compensation cess and GST and I think some calamity charge, the actual impact used to be, 42 to 47, 48%, in some cases actually more than 50% at the very upper end. And now you have clarity that it is 40%. So I don't think so it's incrementally negative. You obviously have to go stock wise now. So something like, for example, two-wheelers, it is extremely positive. And I think that was being seen in the price action. Just look at the price action in a TVS, some of the others, even something like an Ola Electric after it announced its own fuel cell ecosystem. Similarly, for auto components, you see Uno Minda made a new high, Lumax made a new high. So companies who had a larger share of two-wheeler portfolio already started reflecting that. So I think two-wheelers are clear beneficiaries. Something like an M&M also gains almost 55-60% portfolio, less than 1500 cc, tractors, three-wheelers, low-end LCVs. I think all benefits, almost 60% portfolio benefits. And I think the stock has been doing very well. If you look at the month-on-month numbers, they're reflected on the screen also right now. And I think even something like a Maruti, for example, hasn't done anything since probably 5-6 years, and now suddenly gets a bit of a fillip with new launches. So I think for auto sector, it's much needed. It's almost 25% of our manufacturing. India is also one of the global hub as far as auto components are concerned. Ukraine was the second biggest auto component market in non-EV parts. That has undergone a lot of damage. So I think India really benefits, and I think in terms of demand, job creation, and I'm extremely happy there. And I think the fall in percentage drop, if you see from 28 to 18, is the highest. The other one is essentials, where it goes down from 18 to 5. So I think FMCG auto clearly are two big winners in this.
Gurmeet, we don't have much time. Are you buying any of those today?
In autos, Aisha, sorry, I missed it.
Yes, all the sectors that you just talked about. Are you buying any stocks or cars?
So I think car I would wait for the actual price to come down. But what we are adding is we will be adding more M&M. We will be adding some more two-wheeler ancillaries like Uno Minda. We will add some cement stocks in our basket. We are also looking at, I think the bigger beneficiary will also be financials, because more money in the hands of people not only drives of spending, it also drives investments and savings. So I think some of the capital market plays and NBFCs and banks are also big beneficiaries, because any revival in demand, any revival in capex in future, any revival in economic activity will eventually get reflected in financials as well. So I think that sector, in my view, is also the most value part of the index. Look at, for example, the entire Bank Nifty available at about 17, 18 times earning, maybe lesser if you add more PSUs. On price to book basis, on everything, if you see they're lower than their 10-year median, even if you pick the flagship, private banks. So I think that's another pocket which, in my view, is not showing as much traction, but should be a beneficiary eventually. So that offers value as well. So I think broadly we would now want, more cash to be deployed. If somebody has 100 rupees, I think probably 40, 50 rupees can go in over the next couple of days, and the balance over the next maybe 2 to 3 weeks.
Absolutely. Okay, Gurmeet, great to have you on the show. Sunil, we'll let you go as well on that note. Well, we will get back to our chartists and get in some trading ideas. But yes, indeed, the big tax reset is here. The council has cleared GST 2.0 from